I've been getting quite a few questions recently from clients about what's going to happen with the housing market in the near future. How does what's happening now in the economy have an impact on the real estate market? Obviously, one would think that with all the craziness going on right now, that something's got to give, right? Well, I completely understand your concerns. I mean, it's valid and it can be scary. Some people may have to sell and they don't really have a choice because of a job transfer or a job loss. But some may just be wondering if they should, hold on and see if the market goes up and that they can get a better return on their investment, maybe by waiting, a few months or a year. Waiting for prices, in other words, to go up. On the other hand, some people are looking at this and saying, well, gosh, maybe I should take my equity off the table right now in case the market goes down. I mean, there's certain factors and variables that can cause housing markets to go down or go up, and those factors can all have a positive or negative effect on the housing market. Well, I'm Don Pelletier, the owner and broker of the Don Pelletier Group, and unemployment is one contributing factor, and it was lower pre-pandemic and then spiked pretty high from April through about July, hovering between 8 and 14%. But it's been coming down month after month ever since. April was a positive sign, and obviously we're hoping it keeps coming down, of course. Experts are projecting right now that it's going to continue to drop. So there's been several recessions in the United States historically throughout history, but if you look at all the times during recessions where the number of months in unemployment was, say, greater than or equal to 9%, the recession of 2020 is actually the lowest. It puts the unemployment perspective where we are right now nowhere near what it was in the past. So for example, the Great Depression had 108 months, Great Recession of 1980 had another 19 months, and in 2020, we've only had 4 months where the unemployment rate was greater than or equal to 9%. Also, another factor, the number of people that are in active forbearance is decreasing and continuing to go down as more people are paying their mortgages and getting their jobs back. Many people are wondering what's going to happen due to the outcome of the recent election. Well, I'd recommend looking at a few factors. For one, inventory is inventory. So back in 2008, for example, the levels of inventory were very high, resulting in a buyer's market. Home prices were depreciating because there was so much supply of homes. Today, we have the opposite scenario where inventory is very low, showing that it's a seller's market and prices are going up, up, and away because buyers are willing to pay more right now to help ensure that they get a home. Also, right now, the percentage of equity that homeowners have is very strong. In fact, John Burns Consulting tells us that 42.1% of the homeowners in the country own homes that are free and clear, meaning no mortgage at all, and that 90% of homeowners have at least 10% equity, so that less homes will be going to foreclosure due to that equity that the owners have. So there's a lot of data that points to a very positive forecast for the housing market in the near future. Feel free to reach out to us at no cost for a risk-free, hassle-free strategy session anytime. You can contact us here at 858-336-1114. We're happy to hear from you and always happy to help. Don Pelletier here signing off. Make it a great home selling and buying day. Thank you.